This is an episode from history that rhymes. This is courtesy of our friend Jeff DeGraff over at Renaissance Macro Research. And what he did is study the price action of the S&P 500 in the last year and compared it to what fits most closely to the whole path of markets from previous eras. And 1956 to 1958, believe it or not, is one that came up. You can see how well it matches. So this is the last year in blue of the S&P 500, and this is this 56 through 58 matched up near the all-time highs at the time. So you see right down through the lows, it was very close. What's interesting is we've outperformed that over here. In fact, we're up a little higher because this is at the end of last week. So this is where we stay relative to this path. He's not saying, nobody is saying it has to follow along from here on out. There was a brief recession that began in 1957 that the market anticipated, and it went down about 21% peak to trough. We, of course, were down about 20%. So what it would suggest, and this goes along with a lot of the pattern analysis, which is it's very unlikely that we do this. Right? It's much more likely, even if we're going to recover from here, and if December 24th was the low, is to do something like this and then maybe get up from there. That's the bullish scenario. Even a bullish scenario says we have to calm down a little bit, perhaps, and back away. V-bottoms are rare. They happen, but they're rare. So I do think that was interesting. Again, we did have a brief recession. The Fed was tightening right up until that market peak. It seems like there were some similarities. You have to take it with a grain of salt, but it's fun. And to anticipate your question, Sarah, I was not there watching the markets.
I was going to ask.
Just a young boy.
That's right.
Yeah, you weren't focused on markets yesterday, the baseball.
Yeah.
But Mike, I guess what you drew with the extra green line is that we actually have had a bit of a sharper V than in 1957.
Without a doubt.
That almost makes me worried that this definitely can't be repeated because it's quite clearly different already.
Well, it's different. I mean, obviously we diverged in here a little bit too, so it hasn't necessarily been step for step. But yeah, it's going to raise the question as to whether there's something else. And we can look at other ones. We can look at 1962, 1990, 1998, which would be more like a V. But again, I do think what it is just to temper people's expectations that, hey, we're up 11% in 3 weeks. You know, we're off to the races again, and that was just a bad dream. So that'd be the optimistic take, but it's probably too much to hope for.
And 92, 98, all of us were around rather than just
That's right.
you back.
And I was watching.